So you can clearly see we are actually in a bearish flag kind of setup on Euro USD. This is the 4-hour chart, but it seems like the euro does not want to budge against the dollar. So it's just holding at this level for now. The euro is one of the pairs that I love to trade, as well as the US dollar versus the yen. You can see basically there is some movement there after the bearish flag on USD JPY, but euro USD is not budging. Let's see on GBP USD, we are actually at a key level as well. We are probably going to see what's going to happen as the day progresses. Otherwise, the currencies have been weak against the dollar. Same deal on Australian. Again, holding on that key psychological level of 0.70 and 3 zeros at the back, 70,000, 0.70,000. So these are actually four of my favorite pairs. The rest of these pairs, I just have them for fun when I see people doing their analysis and stuff. And sometimes people ask me to comment on stuff, so that's why I all have these pairs. But I don't usually trade any of them. I just usually focus on these top four, which I think you should do as well. So in this video, however, what we are going to talk about is the strategy that often gets people banned by brokers. And I think I previously mentioned how I also exploited this strategy with a broker that had established in South Africa, and they closed down. I think they are back now. Not mentioning any names, but the strategy is illegal with most brokers. I will not say all brokers. It's illegal with most brokers, because what you essentially end up doing with the strategy is actually not trading against the market, but what you're doing is basically trading against the broker themselves. And we know brokers don't like that. So the strategy is basically called latency arbitrage. Latency arbitrage. You can Google it. Latency arbitrage. It's actually used by mostly it's used by high frequency traders. High frequency trading. The big guys that trade with these fast robots that can actually trade probably millions of trades per minute, just making a cent at each trade. End of the day, they are making millions. So it's mostly used by these big guys who are using these high frequency trading systems. And also, these guys have invested so much money and infrastructure in making this thing work. So how it works basically is, for example, in stock trading, because it happens in Forex and it happens in stock trading, and it's probably more pronounced in stock trading, although it happens in Forex trading as well. But I assume it happens in many markets. So what they do, you find that most of the big hedge funds in the US, they try as much to get high speed access to the exchanges. What they are trying to do is to get in front of all their competitors in terms of getting the signals first, signals for sales and buys. That's what they are trying to do. So they are trying to be first to receive the signal. So what they do is, if you're the first person with the information, then everyone else gets what that information. You can basically trade against those guys, because for you it's like you are actually living in the future. You know where price is going to go in the next 5 seconds, in the next 10 seconds, in the next 40 seconds. And for you and me, because we are trading with our own forex robots, sometimes that break, sometimes that are not so efficient, and most of us are actually still doing manual trading. For you, 40 or 5 seconds is a short time for you to be able to place trades and get out. So that's why they've invested a lot of money in creating these high frequency trading systems that they use. But does it mean that retail traders don't use latency arbitrage? They do. Like I previously mentioned in a previous video, you can actually do it, but be cautioned. If you get caught, because that's a problem, you can do all these shady strategies and stuff like that, but if you do get caught, you'll be in trouble with your broker. So what you do, basically what you do is, as a retail trader, is to find all the brokers that you are able to join. Maybe go through all the brokers that you're going to join, that you're able to join. Now, what you're going to do is you're going to compare the execution times between the brokers, and you are going to compare the signals, the speed of the signals, how much signals, how fast they can get a signal from the market to display on their charts. That's what you are looking for. So you find that some brokers, by their nature, maybe because they are big and they've got the infrastructure and they've done the investments and everything, you find that execution times and getting the new prices to reflect on their charts is like lightning fast. Like the moment anything changes in the market, it's there on your platform. I'm talking about you even when you're using MetaTrader 4, MetaTrader 5. You find that's why you find, if you compare the candles on MetaTrader 4, same broker or different brokers, same platform, MetaTrader 4, you find that each broker is having sometimes different candles at different times, because it has to do with how fast they are able to execute what and display that information. So what latency arbitrage traders do is they find the broker with the fastest execution times or the fastest display of information on the charts. So then they again find another broker that has got slow latency, like slow speed. Like you might see that with other brokers, a new candle is already formed and it's moving or it's growing. But with this broker, it takes maybe 30 seconds or it takes 40 seconds, 50 seconds, especially when it's volatile news. That broker is slow to reflect what that signal from the market on their charts. So what they do is they open an account with that slow broker. Then they just watch the candles forming on the fastest broker that they found. And sometimes you see that there is a massive candle forming up on the fastest broker, but there is not yet anything forming on the slow broker, but you know this slow broker will catch up at some point. So what they do is they then quickly what? Buy or sell depending on the candle that's forming on the fastest broker. So on the slow broker, you quickly go buy or you quickly go sell depending on the candle. And lo and behold, when that slow broker catches up with the fastest broker, you're in profit. The slow broker did not even have a chance to hedge against you. That's why it's banned. That's why it's illegal. That's why you are making money off what? The slow broker. And many traders I know who show off on social media, and you wonder how are these guys able to predict the market so accurately with their trades and everything. It's because they are also exploiting what's called latency. That's the speed from when the broker receives the information, executes it or displays it on their charts. So the traders have been exploiting this. It's illegal because you are actually executing trades like in the future. When you're executing on the slow broker, you are basically like from the future. So it's banned because the slow broker, unfortunately, does not even have time to process that future information in order to be able to hedge against you. So they lose money to you, and you just make money and continue making money. But if they catch you, if they realize that that's what you're going to, what you are basically doing, latency arbitrage, then you definitely are going to be banned from that broker. And that's how many of these forex mentors with their perfect trades are actually, some of them they will tell you they just chased away by this broker and blah 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 and stuff like that. So those are that's one of the banned strategies in trading, because you are basically robbing the broker. It might sound like so what's wrong, because the brokers they rob traders all the time. But anyway, that's the rules of the game. You cannot do latency arbitrage with most brokers. They catch you, they get you off their brokerage. Either if they suspect that you are doing it, they actually delay your trades of going forward, or they will refuse to actually execute your trades. So that's it for this video. Like the video, subscribe if you are not yet subscribed. If you have any questions, leave them in the comment section below. I'd like to hear what you think. Any thoughts about the strategy, or if you want to hear about any other banned strategies in trading. If you are looking for free forex robots, indicators, books, and stuff like that, there are links in the description box below. Visit those links and see if you cannot find what you are looking for. The broker that I use, see the link in the description box below. From $5, you can start trading real markets and test your strategies and everything. Until next time, guys, bye.